All right, guys, welcome back for another video. I just wanted to upload a quick video around today's daily close, as it does look like Bitcoin is breaking the range, starting to move out of this consolidation. We just got the new daily close live above the previous high right here. Pretty good volume coming in above the moving average right here. I do think that is an area of significance. I do think it is a big deal. And I think we're likely to break this consolidation to the upside. You know, so one thing I want to kind of touch on in this video is one of the, it ties into one of the rules that I implement in my trading methodology. And that is that anytime you're coming off a volatile move, I never want to fade the first pass of a liquidity breach. Um, and right now, recently, that area was right here on the chart. So to put it in context, you have this volatile move coming down to higher time frame support. If we go out to the weekly time frame, you can see prices coming down to the previous cycle all-time high. Price goes down there, um, extends there in a volatile fashion. A lot of liquidations and different capitulations in here. So it's hard to describe this as anything other than a volatile move into a major support. And then whenever I see that, I always want to fade the first pass, right? So this move up, this high, was not a breach of liquidity. Um, I mean, you could argue it is here, but it's not obviously so on the daily chart. Really, what this is a fill of a price extension. So you have price come down here, pause here. It'd probably be easier to see on a 4 hour. Yeah, price comes up to this level here, fills the price extension, sells off. So you end up with this price extension fill into this area, this order base, run down back to the low, set in a higher low. But then here's where you get your first liquidity breach. And that's the area where I always want to fade that coming off a volatile move like this, because, you know, a lot of times, most of the time, I would say, whether this consolidation ended up breaking to the downside or breaking to the upside like it did here, a lot of times this first breach of liquidity will always be not always, I shouldn't use the word always, but often it will be a liquidity run. And, that actually lines up with a Wyckoff distribution pattern or accumulation pattern. So if this were to have played out as a Wyckoff accumulation at support, which it didn't, but if it did, it would have. This is your phase one of the Wyckoff, and then typically during a phase one or after the phase one in a Wyckoff accumulation, uh, it runs liquidity above the range, and then it'll run below the range as well. So you could have had a situation where price ran above here and then ran the lows down here and then closed back in the range and bleed sideways a little bit and then run. That's typically your Wyckoff. But regardless, again, going back to the principle, even if it is Wyckoff, right, it's and ultimately breaks up, a lot of times it's going to sell off at that first pass. I think there's a solid edge there. A lot of times it'll also be trading, the moving averages will be coming down, pressing down. So there'll be some sell pressure trailing with the order flow. So just something to keep in mind. But again, we're beyond that stage of the market, um, and we've set in this third drive, and so typically, you don't generally see three drive distribution patterns coming off support, right? That's typically a distribution pattern coming off a parabolic rally or a significant rally. If you get these, again, going back, we can find an example like that. Pretty obvious one from spring of last year. So, yeah. So, you get your parabolic run, and then you get your three drive divergence, and then you break structure, come down, sell off. But typically you don't see that coming off support. So it's a little bit of a nuanced thing, right? Typically, a lot of times you will get, a breach of first pass liquidity, and that'll get faded. But you generally don't see the three drives coming in at support. Typically, if you do see that third drive, a lot of times that will be the break, right? Because if you, say for example that, this consolidation was going to break to the downside, typically this would have been your short entry right there. You can see that right here. See, price comes up, runs above this level right here, runs above liquidity, and there's your short entry for the downside. Similar deal up here, right? Runs above for liquidity. Again, not perfect, but similar type of deal. But now that price, ran up, came down, set in a higher low, ran up, broke this high on heavy volume, not heavy volume, but above average volume. Shows me that we are breaking this. This consolidation is being broken. Um, if we go down to the 4 hour, we can see, how do you identify a swing failure pattern from uh, this area right here, or I guess put it a different way, you have these two daily highs, right? So someone might be asking, okay, so you get a throw over above the previous high right here, and that's a liquidity run and run down. How do you know this won't be a liquidity run? Well, you don't know that. It always could be, despite the dynamics I just mentioned. There's always a possibility that any run above a historical high ends up being a swing failure pattern. So how do you identify that? Well, right here, just you would generally, we identified this as a daily swing high uh, in the previous few minutes. So this is kind of how you'd go down in the intermediate time frames. I've gone down to the 4 hour chart, and we see this breach above here. You could mark this off. So we run above, price even closes above, stalls up there. This is where the stops are. A lot of liquidations. Um, you know, Generally, if you were going to see continuation, you would see continuation pretty soon after breaching that liquidity, almost right away. If you breach liquidity and then you start stalling and going sideways, that's a red flag right there. Of course, you don't have your confirmation until you break the short-term time for consolidation here. So, on the 4 hour chart, that would be right here. It's probably even better seen on an hourly. So we'll go down to an hourly. Yeah, you can see it. Having a little bit of technical difficulties right here. But yeah, you can see the daily high right there. And price runs above, then goes sideways a little bit. Then when you get this closed down beneath that very quick, that's a red flag right there, but it's not necessarily confirmation. Confirmation is when you break these intermediate time frame lows. So you see run above these old highs, price stalls, and then comes down, rallies off this area right here. We can mark this off. This would be your a low time frame consolidation right there. Hits the high of that, rallies up into this area, and then starts going sideways. So there's your red flag right there. Again, you would want to see immediate continuation after that. But again, we don't have confirmation it's a swing failure pattern until this intermediate term low is broken. You can see price kind of runs down there, and this is not an area to be looking at this as support. If you see price kind of you know uh, demonstrate this type of behavior, hanging out at that level, that's not really a good sign. Typically, if it does that, order flow is changing around, and you can see that based on the EMA spread. But ultimately, yeah, it does break, and then you get your confirmation on the break of these lows that you do have a swing swing failure pattern. And again, you get a pretty full retrace, and and then it finds a higher low on the daily, and then you start bucking the uptrend or the downtrend, and then the EMAs switch around, and you've got your uptrend. So yeah, just going back to the daily chart to show what that looks like. Here's your swing failure. So we identified it on the 1 hour, but it was really just the low of the following day's candle. Well, I guess it was the same day because it ran up above, came down, closed in the range. But the low of this indecision doji candle right there, yeah, the day after was even more indecision. So liquidity is drying up, ran lower. So I guess the carryover would be, okay, how do we identify if that same type of feature is going to play out here? Well, I think so. We have to mark off the liquidity above here, just to give us a basis for reference. Um, you know, price ran above, you get a run above, and then it comes down and sets in a low off these highs, right? Like what we previously identified before. Maybe mark off these levels, but now you've got that intermediate time frame low. So you can mark off this low right here, 21,394. If you're bearishly inclined, in my mind, that would be, that's where this starts to become a different pattern than what we're currently seeing, where price is appearing to break the consolidation to the upside currently and run higher. If you see price run below 21,394, then that's typically going to be a different type of swing failure pattern. And then that's kind of generally when you would see again this is where you would if price ran down there and took out these lows, that's generally where you would see the 4-hour EMAs turn around, maybe even hourly. So it's a different way to basically identify the same thing, right? You can identify that distinction occurring via price action, or you can use EMAs. Um, there's a lot of different ways to skin a cat. So I'm not going to say one way is better than the other. Sometimes it comes down to personality. Whatever is a better fit for your personality. So much of trading is unique and tailored to the individual. So whatever you find works for you, and that you identify with closely, that's probably going to be the best strategy. Um, you know, especially the type of edges or price distinctions where you find yourself just naturally gravitating towards, without anybody necessarily telling you to do it, right? You just find yourself almost intrinsically pulled toward some type of statistical model or statistical price distinction. There's going to be a lot of wisdom there, and it's going to be uniquely tailored to you, which ultimately is the best form of edge. I'm just looking at the the momentum averages or momentum indicators down here. Nothing really unusual on the RSI or the stochastics. I mean, they are showing generally bullish movements. Um, let's see if we got the 4-hour. Yeah, basically, uh, basically just showing you what price action is showing you. Now the weekly. Okay, so the weekly RSI is getting interesting here. So this, I want to bring this up just because it is very significant, and in my opinion, it is uh, the highest edge uh, indicator of any momentum indicator I've ever used personally, and that's the weekly EMA. Now it has a great deal of edge whenever price crosses it, but particularly when it's coming out of the critical zones, with the exception of sometimes when it's coming out of the very critical zone on a bull run. But particularly when it's coming out of the critical zone from the the exhausted RSI phases, that's when you see an edge that is very, very, very accurate. So if we just run through the previous mentions real quick, so let's go here. So you got price coming out of we're going all the way back to February 15. So here you see price cross up, and then that's actually where price found a bottom, and it did kind of retest that bottom pretty often. But again, every time that price retested, ultimately when price would reclaim the EMA, you would typically see a rally follow. Like right here, you see a reclaim, a couple weeks of rally. You see a rally reclaimed here, and then really starts to initiate the bull trend coming out of there. And then it's leaving the critical zone. That's really the area I'm most concerned with. Let's see over here. Yeah, you see that area right here. Again, it kind of toys with it right here, and then closes above right there on this weekly candle, and then that's really the start of the bull trend. Then you get a March 2020 kind of brought things very low in a very volatile and abrupt fashion. But price quickly did a V-shaped recovery, and then when it reclaimed the weekly EMA right here, that right there, that's when to start your bull trend. Again, price came down, tested a little bit, bounced off. again, came down, lost it for a little bit, but then when it reclaimed it here, it was off to the races, went parabolic. Same deal here. So you get the China minor band right here, and price comes down to a little bit oversold RSI. Again, it doesn't, price can always dip lower, right? But when it comes down to this oversold and then reclaims the RSI EMA right here, that was really the beginning of your run up to a new all-time high at 69,000. And again, even here where it wasn't a great run, right? This is a good example of like how good this edge is. So even when it didn't work out, it gave you the opportunity to pull in a little bit of profit. So we're in the middle of a pretty violent weekly downtrend, and even then, RSI is oversold. It comes up, crosses above the March, well, above the RSI EMA on March 14th, 2022 close right here. So that confirmed at 41,000, and then it trades up to 48,000. So even in the midst of this heavy sell pressure, it still gave you, 7,000 worth of price action, and that's enough, to definitely start taking profit, pulling in profit, and you could have made money on that trade, even though it ultimately didn't, become a holding position. I think this area though is, a little bit more opportune, just because RSI got even more extended, more oversold, and so again, RSI, we're at RSI levels that Bitcoin never really has traded at. I mean, it came out of it back in 2012, but as far as trading down into it and rallying off in modern price action, this is the lowest it's ever traded down to. Even the bear market of 2014 didn't hit these lows. 2007 or 18 didn't hit these lows. So we're very overextended. I shouldn't use the word overextended, but the RSI is at historical lows. So it's an outlier. And that makes sense because we've seen a lot of funds blow up, right? A lot of the Ponzi's in the space blow up. A lot of funds go insolvent. So that's not just liquidation of retail player. That's like liquidations of, the big boys in the space. And then we see that oversold read, and it looks like RSI is toying with the EMA. And I think the caveat here is that, the weekly close is a long way away, right? It's, we closed the weekly close yesterday, so it's still 6 days left. But that can be an eternity in crypto. But it is something to keep on my radar because, I think that if the this area does play out in that way, then we'll see a pretty sustained rally, right? So and a pretty, whether you want to call it a rally or a short squeeze or whatever, again, whether you're a bull or a bear, right? Price could rally all the way up here and still form a lower high. But just based off the momentum in this possibility and how oversold price is, I wouldn't be looking to sell, near. I would be looking for an expression of volatility to the upside that in some ways mirrors the expression of volatility we saw to the downside. And put in other words, I think volatility is just increasing, right? Which kind of goes contrary to one of the narratives that existed in the space, that institutions are getting involved and therefore we won't see as much volatility. I think that narrative is obviously disproven at this point, right? We've seen some of the craziest volatility we've ever seen in Bitcoin, at least in modern history. So that's something to keep an eye on. Again, institutions are getting bathed in their first bear market, and at the end of the day, they are, human beings as well, subject to the same emotions. I think over time, volatility will increase just because the fiat credit system gets more unstable as it expands. So I think with the passage of time, we may see even more volatility in Bitcoin, which ultimately is a trader's best friend, but can catch some people off guard as well. I hope you guys like this video. Again, please just leave a like on the video, subscribe to the channel, and I'll catch you guys in the next upload.